Hey guys, today I'm going to teach you everything you need to know about residential real estate investing. Everything from what to buy and how to save taxes when you are ready to sell. So without wasting any time, let's get into it. If you are new to my channel, my name is Jas Oberoi and I'm a real estate agent, investor and a serial entrepreneur. I went from working as a server to owning multi-million dollar worth of real estate portfolio in just 8 years. In my career, I have helped hundreds of my clients buy over 900 million worth of real estate using tried and tested strategies, and I am here to share those tips with you on this channel. All right, guys, before we get started, just a quick heads up. I will be sharing my personal experience and what worked for me. But keep in mind that this isn't a legal or financial advice. Having said that, my aim today is to break down each concept step by step so you can decide what fits your journey. Now, residential real estate investing is all about buying properties where people live. The goal is to hold on to the property while generating income from renters. So a big chunk of your mortgage gets covered each month. Meanwhile, the value of your property appreciates over time, boosting your long-term wealth. Think of it as win-win. Your tenants are helping you to pay down your investment and your property's value is growing year by year. People love investing in real estate, especially in BC, primarily for these three reasons. Number one, high appreciation. 2, strong rental demand. 3, beat inflation. Now let's discuss what type of properties are the best for residential investing. When it comes to picking the right property, think beyond the surface level. Let's go over with an example. Imagine you have two properties to choose from. Property A, a fully renovated move-in ready home built in 1994 with 5 bedrooms, 4 bathrooms, about 2200 square feet and listed for 1.7. Property B, outdated but also built in 1994, has 3 bedrooms, 3 bathrooms, about 2800 square feet and listed at 1.4 million. Which one would you choose? If you picked property B, you are thinking like a smart investor. Although property A looks nice, from an investment perspective, it's not a good option. Property B, on the other hand, allows you to add value and increase its price with renovations in the same market. When it comes to real estate investing, you don't want a prettiest house on the block. Instead, look for properties with a room for improvement, a fixer-upper that doesn't have a suite. These properties tend to have more potential for value increase after renovations. One crucial tip for any investor is never rely only on speculation. Make sure there are upside potential to your investment. You want a property can improve, rent out, and eventually sell for profit. Look for opportunities in the area that are up and coming or need renovations. That's where you can add value and get the best returns. Let's go over a couple of real life examples from my own portfolio. Number 1, property in Surrey. I bought this property at 1.1 million, invested about $150,000 in renovations, bringing in my total expenses to 1.250. I later got an offer for 1.4 million, but I didn't sell. Not that I didn't want to sell it, but my rule of thumb is I only sell if I know I can double the down payment. Until I don't double the down payment, I don't sell it. But your strategy can be different too. It doesn't need to be the same strategy. Whatever makes you feel comfortable. My point was I wanted decent amount of money to be made before I sell the property. Number 2, Penthouse. This was a penthouse with an unbeatable view in downtown Vancouver. I purchased it for $1,235,000 and put about $50,000 into renovation. Now, comparable properties in the same area are going about 1.5 million without any market appreciation in terms of market is going up. In the same market, those kind of units are selling for 1.5. These are the types of properties I want you guys to purchase as well. Use my tactics and you will succeed in your real estate journey. But of course, every investment has its challenges. Realistically, the major con I think is capital gain tax when selling the property. But I will teach you what no one talks about, how you can protect your investments with the holding company. So basically, a holding company is an incorporated entity that owns your real estate investment, and it comes with multiple benefits beyond just saving taxes. Let's break it down the key advantages of using a holding company. Tax savings. By owning a real estate through a holding company, you are taxed at corporate rate rather than a personal rate, which can be significantly lower. Here's where it gets interesting for fix and flip or fixer-upper properties. If you purchase, renovate, and sell a property quickly without renting, any property from that sale is considered active business income, typically taxed at 11 to 13%. This lower tax rate applies because as a corporate entity, the profit is treated as business income, not passive income. However, if you choose to renovate and hold the property as rental, rental income becomes passive income. In that case, it still benefits you as you pay less capital gain tax under holding company than if you have held the property in your personal name. Risk mitigation. Holding companies provide an essential layer of protection by separating your personal assets from your real estate investments. In other words, if there is a liability or legal issue with one of your properties, it shields you personally, reducing your risk. Credit protection. When you purchase properties under holding company, the debt associated with those properties generally won't appear on your personal credit report. This is the biggest advantage if you are looking to keep your personal credit clean and clear for other type of financings. Partnership flexibility. If you are bringing your partners to help with down payments or renovations, each person's stake in the property can be held by respective companies instead of personally. This way, all partners protect their personal assets and maintain benefits of corporate structuring. One last thing I wanted to emphasize is that these strategies are completely legal but often underused. Many investors aren't aware of benefit of holding company or the ways you can legally structure deals for optimal tax benefits. So make sure you leverage these techniques to maximize your returns, and be sure to check out my follow-up video where we will dive into subdividable lots and how construction financing works for those types of projects. And guys, if you found this video helpful, hit that like button, subscribe and share it with anyone else who's ready to start investing. And as always, leave any suggestions or questions in the comment. Until then, I'll see you next time. You guys have a wonderful day. Take care.